in the next few minutes. But welcome to this, the TradeWinds Shipowners Forum this morning. If I could just offer a few housekeeping tips. There aren't any expected fire alarms or anything, so if you hear an alarm going off, don't run, but make your way in an orderly fashion for the exits. You're also all adults, so please turn your phones off or put them on silent whenever you can. All the details of what we're planning to do and CVs of people and the like are in the booklet that you've been giving. We have what we're calling a business briefing this morning with this panel of very influential opinion formers about the factors that are affecting the shipping markets going ahead. Then this afternoon we have a panel of shipowners who will perhaps get more down into the nitty-gritty of particular markets and their perception of the months and 2 or 3 years ahead. Now, if I may just take a few minutes just to offer a few introductory thoughts. I'd like to say here we are again, Posidonia 2016. Summer's nearly here, the sun is shining, or at least it was earlier, and interestingly the Greek fleet is continuing to grow to now record levels, world-leading status. Life must be good, but frankly, as we can see from the clouds that were gathering earlier and the storms that are expected this afternoon, it is not as good as it may appear on the surface perhaps, because let's be blunt about it, much of this industry is in a real mess. Some ship owners may be eternally optimistic, but financiers are equally pessimistic. So where exactly are we today? As a journalist, a good crisis is something of a gift that always keeps giving. There are always stories that you want to hear, some good and a few not so good. But make no mistake, above and beyond all the increments of what may be seen as seems difficult stories, this is a dark period. In the last few weeks, when I was preparing these notes, I have looked for some statistics, and I'd just like to offer a very small handful of them. It's estimated that last year, some $65 billion worth of equity was destroyed in this business. That's just last year, that's not including this year. Of the 7.2 billion tons of dry cargo, arguably that was carried at zero net freight, i.e. for no profit. The Clark Sea Earnings Benchmark Index is now below $9,000 a day. Even last year it was at 14,000. The BDI, as everyone knows, has been at lowest levels. The coal trade actually contracted last year. We have zombie shipping companies, up to their eyes in debts, with banks not refinancing them, that really can't move. We have quoted shipping companies that are effectively penny stocks, that even stock pickers are avoiding. The container business is at its worst state in its 60-year history. The S&P market, prices are down and volumes are down. Shipyard ordering was at its lowest level in 20 years, offering very real strain for the future survival of major players there. Equity markets are shut, banks are running away, and let's not talk about offshore. And even the Baltic exchange is set to be sold. One analyst recently said, sentiment is just as bad as after the banking crash. But is this crisis just an unfortunate set of market cycles overlapping? Are the optimists right that there are inflection points in dry bulk and containers just around the corner? After all, things couldn't get much worse, surely. Or are there other forces at work? Is there some real structural change in the drivers of shipping that overshadow these short-term trading cycles? Of course, back in the real world, here and now, shipping continues to perform. There's fuel in our cars, food on our tables, and lights are on. Since 2009, there are 20% more ships, 50% more tonnage in the enlarged fleet. 300,000 more seafarers have been trained. Fewer oil spills, and there are fewer accidents. At Davos earlier this year, where the World Economic Forum, where the world's leading politicos and business people gather, the pop impresario Will I Am caused quite a bit of mirth by urging everybody in the midst of all this gloom general economic gloom. He said, let's put our optimism goggles on. Now, shipping people always have their optimism goggles on, I don't need to tell you that. And even us journalists, I would admit, sometimes, although we are skeptics, we are interested in where positive stories are. Through these optimism goggles, I see huge opportunities despite this chaos. There is surely hope of a bigger, better, smarter and greener shipping industry. But the challenge is going to be how to manage that change from that disruption. The panel we have today, we hope to discuss some of those issues to get to the bottom of some gritty, the real world challenges, to provide you with some insights that will offer understanding for you to reflect on where your businesses are and how they will develop. So, for starters, I'd like to go along the panel and ask them for a short contribution of 2 or 3 minutes, perhaps, on their view of the game changers the business is facing. So, if I may, first of all, start by introducing Henriette Brent-Petersen, the MD of Shipping, Offshore and Research at DVB Bank. DVB Bank is a specialist transport bank, as you know, which obviously has a very big footprint in shipping, but not without some cost. Recently was talking of its credit losses that are having to increase, reflecting the challenges in its markets. So Henriette, your view of these game changers.
Thank you very much. I will start with a brief and then focus more on the dry markets, the container and the dry. We have for a long time been preaching that we are temporarily out of traditional shipping cyclicality, and that we will only come back when we stop believing in it, for various reasons. Extreme volatility and seasonality leading to contracting activity, excess access to funding, but most importantly, the political variable in our commercial industry, excess shipyard capacity, used for speculative ordering, killing any rebound before it actually materialized. One can start to argue now that in some sectors we are close to coming back to traditional shipping cyclicality. However, all sectors are faced with excess supply, and the short-term key risk remains excess supply and more contractings. That being said, I think today it is more important than perhaps ever before to understand, analyze and translate what is happening on the demand side into future demand for tonnage. Literally all shipping and offshore sectors are faced with significant structural changes, game changers, and big changes on the demand side patterns, which means that subsectors will emerge differently, and one cannot use history to write forward how the different subsectors will emerge post a rebound. Each time we open the newspaper, we can read about downgrading of world economic growth. Latest with IMF downgrading GDP forecast to 3.2% from 2.4 in January. And how does the oil price translate into demand for tankers and offshore? In the short term, very, very differently. But in the longer picture, of course, very challenging for both. Looking at the global energy landscape, we're in the middle of change, impacting our industry in various ways. We have already seen US energy independence, shale technological improvements, and massive geopolitical shocks happening all the time, expected to continue to materialize. And on the longer term, of course, the fossil fuel replacement with alternative energy sources happening much, much faster than we expected. These are some of the changes and shocks which have impacted our markets as we speak, and futures does not indicate to provide less of it. So focusing on the dry, I was promised 4 to 5 minutes, is that? Okay. Focusing on the dry and the container market. Unlike the years of 2008, there is today a high degree of consensus on the global economic outlook. Global economic growth is expected to continue to be moderate as a result of further decline in emerging markets and a weaker economic recovery in advanced economies. But global economic growth is of decreasing importance to our industry, and that will continue. So what is of key relevance to our industry? One can focus on 3 main global macroeconomic challenges: increasing debt burden, declining commodity prices, but that's a double-edged sword, because it's hurting commodity exporters, but it's beneficial to China, Japan, and the EU, who are benefiting from low prices. Slowdown challenges in the Chinese economy. China has been the center as a key global trade driver for more than a decade. For the container market, China was a key driver of containerized trade as a factory of the world, with increasing for FDIs up to 2008, leading to increasing export to the US and Eurozone, a true ton-mile booster, also driven by increasing empty container traffic. Dry bulk, China has been the center with an extreme growth in demand for commodities. So what can we expect from China in the future? Today, investments covering industry, infrastructure, etc., account for almost half of China's GDP. But as China is moving towards the more service-led growth, we can expect that to shrink to down to 20%, around the level we have in the US and Eurozone. So China's commodity and metals consumption will continue to slow, and we're just seeing the beginning now. So the consequence will be a future GDP growth which is much less trade intensive than in the past. So China is rebalancing its economy and hence also demand for commodities. And this shift in Chinese economy is not a temporary effect to the dry bulk market. It's a structural change. It's significantly affecting the demand for dry bulk going forward. On top of that, we now see captive ordering. We have seen 30 Valemaxes being ordered in 2016. That is not adding capacity to the dry bulk market. It's taking away tonnage. So how is that going to impact on the Cape sector? In 2006, I got the question from a Greek ship owner asking, are the Chinese going to order vessels to cater for their own demand? Maybe that question came 10 years ahead of its time. If we move quickly to container, the mismatch of the composition of the fleet and the order book, with too many ultra-large vessels and future seaborne container demand driven by regional trade, which will be even further structurally changed by factors such as reshoring and of manufacturing. Seen from a cost perspective, it makes more sense to source US consumed goods from Mexico than from Asia. In other words, production is moving closer to the end consumer. We've been saying that since 2008. But by saying this, I actually didn't mean that production would move into the living room of the consumer. But one of the mega trends and future game changers that we now see happening, and it is happening as we stand here, is 3D and 4D printing, with 4D printing being the dimension of time. In the past, technological innovation, steam engine, phone, etc., created great efficiency and productivity leaps. The same is happening today. Technological innovation comes in bulks, and it has been a while since the last bulk of technological innovations. But we are now facing a sequence of technological innovations, and some of them will have a major impact on global trade, and especially global containerized trade. When comparing historic technological innovations, the difference is that the technology innovations happens so much faster today compared to what we have experienced previously. And by definition, accelerating technological innovation is a disruptive event that will change the way we live. So what am I specifically thinking about when I say that we're in the beginning of a new bulk of technological innovations? Driverless cars, sharing economy, Uber, Airbnb, robots, and less use of labor in manufacturing, but also 3D printing. And now also with the fourth dimension, etc. in time. Though it is still hard to understand that the concept of quality comes in the code for your 3D printer, which you repurchase and receive by email. But moving to internet shopping, the consumer has already adapted to buying a product without having touched it and seen it. So this change in consumer behavior has happened. So the next step is happening even faster.
Henriette,
yes.
Could we just wrap it up there?
Yeah, sure.
Thanks very much. There are so many issues you've raised, which will go right directly to the point, and we can revisit them at the moment. Could I bring in Chris Wiernicki at that point? Chris is Chief Executive of ABS and is also currently the Chairman of IACS, the Global Class Association. And Chris has long been obviously at the cutting edge of the impact of technology, hardware technology in shipping, but also increasingly, obviously information technology is involved in that process. Chris has talked of a new era of cyber-enabled shipping, with all the risks and opportunities that may bring. So Chris, a few thoughts.
Good. Thank you, Julian. Good morning, everyone. Listen, nobody knows where the bottom is, to be honest with you at this point. And there are a lot of wild cards out there. We've heard some wild cards already, but you can add to that list. You can talk about commercial scrapping. You can talk about the impact of regulations. You can talk about the price of steel, shipyard consolidation. In fact, you can actually even talk about the price of oil, because actually low oil is an economic fundamental stimulus of growth. And we're talking about it kind of in a different format. And also, as we talked about, access to financing. But I would challenge everyone here to say that the world we live in today is quite unusual. The historic world economy and supply and demand balances that drove our cycles, I think, are, quite frankly, a thing of the past. I think that we have several very significant influences that are impacting our decision-making going forward, and that is technology and regulations. And they actually go, to some extent, hand in hand. If you look at the historical, in addition to the historical supply and demand imbalance, three things really come into play that collectively could shape future cycles: technology achievements, environmental regulations, and the economic performance of emerging countries. And I think that collectively they will shape the future of shipping, and they will drive essentially the next generation of shipping cycles. Regulations are now becoming more performance and goal-based, and unfortunately still somewhat parochial in terms of alignment between international, regional, and local. And we have a fairly aggressive regulatory timeline in front of us with respect to compliance. Technology at the same time is becoming more complex, as Julian mentioned, more cyber-based, more data-dependent, and rapidly changing at paces that we have never seen before. So these two are going to come together, and I think that they will, in fact, become driving forces that, in fact, impact the normal supply and demand cycles that we, in fact, have seen. I think the challenge for all of us, certainly from my position, as from a classification point of view, is that we must not lose sight of the fundamentals going forward. And whether it's technology or regulations, there must be no unintended consequences from well-intended regulations. Thank you, Julian.
Thanks, Chris. Now, moving swiftly on to Richard Fulford-Smith on the far end, that I'm sure to many of you will need no introduction, but I will anyway. He's managing partner, should I say, of Affinity Shipping, which has been in existence now for just about 18 months, which was formed after the split with Plato and its merger with Clarksons, which is obviously a former chief executive of Clarksons himself. But it's interesting. Affinity was set up with the very much the aim to make waves. It says part of its USP is it is focused on expertise, not scale, and part of that is the explicit use of technology in the broking arena. So, Richard, how do you view these issues?
I guess you can hear me. Good morning. On the basis that I've probably got about 30 seconds to speak after the first two, having been told we were going to speak for 2 minutes, I'd just like to say Chris and I rehearsed this last week in Rome. So he's actually basically stolen all the thunder on technology. But of course, what's actually happening right now is that we're just going through a cycle. It's a different cycle. We possibly have got to the bottom of it in parts, but we face some challenges. And I put down a few notes which basically said environmental. I'm obviously a big believer in renewables, as we all should be. Shipping hasn't exactly outperformed other industries in cleaning up its act yet, but we're going to work on that. We'll try to actually put cleaner fuel onto our ships. As far as population, which was another heading, we seem to have an aging population around the world, which is not exactly encouraging for great GDP. And GDP, we know, is one of the fundamental drivers. This is all going to sound like it's negative. It's not meant like that because we're in the bottom of a cycle, so we talk on a more negative basis. We come here, it's sunny, so we actually tend to talk talk about things in a more positive note. But we are coming through this cycle. Urbanisation, we've seen the miracle of urbanisation and what that brought. And I'm afraid to say that the urbanisation cycle as such may actually be declining. The influence it has. New construction. I'm a believer that every single house that will be built in the future will be a conductor of energy. That's not probably great, is it, for actually utilising fossil fuels. Technology, well, he's talked about technology, and technology has to be embraced. Nationalism. We'll talk about Brexit, I'm sure. I'm absolutely appalled that people in our country actually think that it's a good idea to break up one of the world's greatest trading blocs by inviting the UK to exit it, which could trigger other problems for Europe. I'm really sorry about our Prime Minister, what was he thinking about in inviting that problem. The Baltic Exchange, you're all going to face a change. Guy Campbell is going to obviously talk about that later, but this is basically a transfer away from an old way of working. Dry cargo brokers, unfortunately, don't add any value in a system where ship owners just become price takers off a platform. We can talk about that later, Guy, but I remember when I was at Clarkson's, I tried to buy 20% of that particular ground establishment in the thought that one day the job of shipbrokers would disappear and we could at least sell it on to somebody more nobly able to deal with the future. This will come to. That's me done. I was nearly over 2 minutes, but I was better than some, eh? Perfect.
Could I turn to Guy, you on the end, to pick up on some of those things. Guy Campbell is head of dry bulk Atlantic chartering for China Navigation and Swire Bulk, based in London. He's there. Swire Bulk is in the process of taking delivery of the last of a series of new buildings that have been coming in the last couple of years. Before this, he's been a trader and trained originally as a broker and spent several years as head of dry cargo at Clarkson's. He's also has been an international oarsman back in the day. But of course, he's been in the crosshairs in the last couple of years, particularly as chairman of the Baltic Exchange. And in the last 6 months, the Baltic has been involved with talks with various potential bidders. So, Guy, your thoughts on these game changers?
Well, Richard, you came very close to buying 20% shares in the Baltic Exchange, and it's arguably that significant shareholding that causes some angst amongst some of the brokers that chose not to buy shares in the business. Speaking very briefly with my China Navigation Swire Bulk hat on, we welcome disruption in this market. We agree that we're potentially at the bottom of a cycle, but we need more disruption to flush out the bad counterparties, to flush out the overcapacity in our yards. We need disruption. We need Chinese yards allowed to fail, allowed to close. We need more attention to counterparty risk, and we feel, and I've been harping on about this for years, about the need for more attention to counterparty risk and managing that counterparty risk. I'm staggered that there's not been more bankruptcies, not been more fatalities, certainly in the dry bulk market, from an operating perspective at least. And I can't believe it's sustainable. I can't believe it will remain sustainable for the coming year or two. And I look forward with interest as to how the landscape and the horizon looks in the next couple of years to come. Now, I'm here really with my Baltic Exchange hat on, and whilst I work for a ship owner that dates back to 1872, that indeed is owned by a parent company that dates back to 1816, I'm here today representing the Baltic Exchange, which dates back arguably to 1744. We believe in opportunity, not disruption. There's an opinion and there's a view that disruption is ahead for the Baltic Exchange with respects to this sale that we're currently discussing, with respects to this period of exclusivity have with the Singapore Exchange to garner feedback to ensure that we get the product right for our membership and for the marketplace as a whole going forward. There is a concern of disruption to the very crux of what the Baltic Exchange is about today, and that is about its indices, about its benchmarks. What is the disruption? Well, the disruption is the risk of fragmentation of our indices. Now, it doesn't matter where we are in the cycle, it doesn't matter where we are in the curve, it doesn't matter what the forward curve reflects. The important thing is transparency in the market and one benchmark, one forward curve. And any disruption from that would be a bad thing for the market. But we think at the Baltic Exchange we've created an opportunity to ensure longevity in our benchmark, a benchmark that's respected globally, that needs to open the door to the Far Eastern market to increase liquidity in the derivatives sector, which in turn will add to a more robust indices, a more robust forward curve, and will give all the operators and traders that charter your ships the confidence to go about their business and to commit to long-term trading activity. So we see this as an opportunity for the members, we see this as an opportunity for the marketplace, for our panellists, for the maritime services sector as a whole. Thank you.
Thanks very much, Guy. Next, can I introduce Dr. Klaus Stoltenberg, who is the Global Head of Ship Finance at Deutsche Bank, where he's been for a couple of years, having joined from Nord LB. Klaus has certainly been very much in the front seat of dealing with the problems in the German market in the last nearly 10 years now. Klaus, your thoughts on game changers?
Thank you. Look, let me keep it very short in the beginning. I think we all know where we are in the cycle. We all, I'm sure, have carefully studied the fundamentals on the supply and demand side. And we know it's like always in life. There are things where we are here now which are outside our control. There are things which we can control, and there are things which we may influence and control to a certain extent. And for me, that's the interesting conversation I'm having with our clients, is to focus on the area which we can control and which our clients can change, and to make homework there. And ideally, we have a very open conversation about whether the platform is a going concern, whether there's room to grow that platform, or whether you just try to muddle through in bad times, or whether maybe someone should exit that platform. And this is what I like to focus on. We know where we are, but the question is, what are we doing with this? And that's obviously my pitch. And I believe there's a lot we can do ourselves, even though you can't change charter rates. I would think no one of us can. But the reason obviously is that we are in a very fragmented industry, and I believe part of the homework many of our clients are doing is really to have an open discussion about whether there's room to grow, or room to obviously, or whether there's need to exit. And if there's room to grow, I believe this is always, as said before, a viable alternative is really to develop a long-term plan. Because I believe scale makes a difference. I'm based in Hamburg. We have Hapag-Lloyd in Hamburg, and I think they're doing the right thing, honestly. Yeah, they're contributing to a consolidation of their market, and this is, I believe, what we have to do. I mean, I'm highly respectful. I love to work with small family-owned businesses. I'm not challenging this at all, but I believe this market has to consolidate, and this would include what Guy said before, that unfortunately, a few parties will also have to leave the market arena, and this is what's going to happen. And that's, I guess, key. What are we doing with this where we are? That's the kind of discussion I want to have.
Very interesting comments, because that plays into the issue of requiring a whole change in the mentality and the business philosophy of running and developing business. Now, finally, forgive me for being at the end of this line, but Ioannis Martinos, thank you very much for joining us today, the Managing Director of Signal Maritime, which is around 2 years old. It was a spin-off from Maris Ships Management, the family-owned operation. It's a commercial manager with a twist, manages tankers, very much focused on market intelligence tools. They say they actually survey something like 13,000 data points every day, and there are 140 KPIs, which must be a challenge. But with technology, one can do that, and a very different mentality from managers in the past. So, Ioannis, how do you view the?
Actually, I think from an owner's perspective, what will be interesting to try to manage over the next years are the technology changes. I think some of them are going to be good technology changes for the owners, and some of them are not going to be that good technology changes. The first part, which I think is good, is I believe there will be increased transparency in the spot markets. The spot markets right now work with an asymmetrical information in the favor of charterers, in my opinion. I think that now with the advent of AIS data and machine learning, which is a technology that is changing many other industries, people are able to fuse information together and create a very comprehensive picture of the market at any given point in time. For example, in our case, we follow, for example, the VLCC market, and we recompute every 30 minutes every single position of any ship, calculating the probabilities that each particular ship will be available for hire. And that, I think this information, coincidentally, there was an article in TradeWinds on Friday where Jonathan Lee from Tankers International mentioned such a system. We are also hearing other broking houses working on this type of a system. And I think the fact that there are, in my opinion, at least 5 players in the market who are working on this kind of transparency tool, I think that means that it will not be a long time before we actually see it, certainly in the tanker market, which is an easier market to do that, and I think later down the line, possibly also in the dry market. So I think the one topic is transparency, and I believe there's going to be a lot more of it over the next 5 years.
Thank you.
Second, I have the thing that I have on my mind is that new buildings from the perspective of owners are going to be much more risky from a technology point of view. I think we saw some first examples of that with LNG ships. Owners that ordered LNG ships 5 years ago don't feel very good about their technology the technology choices, because the propulsion systems have changed significantly. So now, when you start adding more fuels to the mix, I think it's going to be really hard to pick a technology that's going to work for the next 20 years. And that means that there will be a risk hot potato that people will try, the owners will try to get a charterer to charter the ship for a long period of time, so that they make sure that some of the sunk cost is covered. And I think that will be a very interesting dynamic. And of course, the shipyards will also play a role in this direction. And finally, I think that Henriette at the end mentioned this. I think the automotive space is going to change dramatically over the next years for 2 reasons. One is we saw Tesla release the Model 3, which is a $35,000 electric car, $45,000 electric car, and this means that and they actually got 400,000 worth of pre-orders, not dollars, 400 car units pre-ordered for a car that will be delivered in 2018. And that means that the world is actually, has bought into the concept of the electric car, and, if a good choice is given to the public is going to take it. And this can start, can start changing really quickly in developed countries. So that's one aspect of the car industry. The other part is autonomous cars and the sharing economy. I know for a fact that there's a company in Singapore testing an autonomous taxi service as a solution to the congestion problem in Singapore. Also, Uber is testing autonomous cars in Pittsburgh as we speak. So imagine a scenario where you combine an Uber-like fleet with autonomous driving. There are not going to be many people that will want to own cars in cities. And that will certainly put a pressure as well in the oil commodity.
Yeah, ultimately reducing demand growth in the
Exactly.
longer term dramatically.
Exactly. So I think now ordering now a tanker is a bet from a ship owner's perspective, which extends to to 15-20 years. It's a 15-year bet, let's say, if you work with the majors, and in a lot less than 15 years, Elon Musk has done some incredible things. For example, in the rocket industry, in the space industry, they have managed to launch a rocket into space and then bring it back and land it on an autonomous ship. I think that pushing through with his electric car vision I would really believe he has a real shot of really changing things.
Good, many thanks for that. If I could just pick up on some of the issues raised there, back in the real world, if you like. Klaus, you were talking about the need for owners to look at what they can control. Now, historically, many ship owners, when they were looking at investment decisions, it was largely a hit and hope that there was the hope that trade would grow. And for the last 30 years, trade has grown rapidly in virtually every sector. But there's very clear reasons to think that the last 8 years, something has been changing in a lot of sectors. We see even in the tanker market, which has not grown, not performed as well as many people had expected. And it's not necessarily purely on the supply side. The business is very fragmented. There will still be short-term cyclical opportunities. How do those two mesh in? How do those questions of trying to deal with things you control mesh in with actually the realities of the shipping market in the here and now?
Yeah, look, sure. I mean, many people have placed their bets on ever-growing or long-term growing world growth. And the GDP multiple we have seen in the container shipping world no longer works out because people no longer can realistically place that bet. Of course, whether you buy, so own a ship or finance a ship, you always hope and expect that this asset would generate sufficient cash flow to honor all obligations and offer a nice return for your capital. And honestly, I think in this crisis or in this environment we are in since 2008, there is no longer, also from the bank's perspective, the expectation that such an asset would actually be able in the position to honor debt and other obligations over time. Because it's, the distortion or the shock also I guess in a financial institution is so large that you basically no more rely on steel. And this is the key lesson also from a bank's perspective, you just don't, back in good old days you said, we have 6% leverage, you can always sleep at night. And I think every single banker learned, and I'm sure the equity learned before, that look, it's not about steel, it's about real cash flows, tangible cash flows. And if they're not there, you should think twice whether or not you're going to consider a project. And this is exactly what we hear also from our clients. They're only there, or most of our clients, they're only there to put their capital to work if there are tangible cash flows, if they can lock in charters and so on, especially in today's environment. Of course, we have all kinds of conversations. We also see that there's appetite now to buy bulkers given where they're pricing now. And if there's sufficient long-term view and also a good standing of the client, sure, it can be also a nice bet, but I think most of these projects will come unlevered because this will be very much an owner's call. And we had that conversation last night with one of our clients who said, you came up with this idea to basically give me working capital to survive the next years. That's all I'm asking for. I don't need a big mortgage. I just want you to finance whatever it is, 10-20% of the ship as working capital to survive the next years. Can we do it? Yes, we can. But honestly, usually, we're all now looking for contracted cash flows. And given where the market is, and most of the projects, they're not just there. And so that means no matter where you are on the capital structure, you always are concerned that you catch a falling knife. And no matter what role you have on that capital structure, that's not what you want to do. And this is why I believe we are all now very, very mindful around visibility of cash flows.
Yeah. Is the issue of corporate transparency important for you? Is this a growing issue? Do you need, as bankers, do you need more transparency?
Yeah, look, absolutely. And I'm sure you heard enough and more than enough about regulatory changes also for financial institutions. I mean, client adoption is getting tougher and tougher. It's really, you have to sail with that wind. You cannot sail against that wind. And also as a client, we need client support also to get there. It's very hard if you're working with trust structures and everything and bearer shares, and we need to be able to pierce every corporate veil.
But again, that's another break on sort of instinctive, arguably reckless.
Yeah, absolutely. But if you think about it, transparency also attracts capital, and I believe that's exactly. Look, I've made that comparison before, so forgive me for this, but I believe what we've seen on the aviation side is exactly that people were there designing sizable leasing platforms who were so transparent and strong in itself that they were able to attract capital, that they were able to obtain ratings from reputable rating agencies, and therefore they were able to tap capital markets, i.e. diversify their funding mix. And this is exactly what, also personally, I've been pushing for many years in shipping, and we only see very few of those leasing platforms in shipping, and I believe that's one of the ways to go. And the key step one is, so to say, to create that level of transparency that you're mentioning, exactly.
Yeah. Thank you. Richard, you seem to be an enthusiast for the Baltics.
I actually have to say I love our bankers, right? Because actually we're at a point now where the banks should be interested, but they never are. The truth of the matter is, when we get to the bottom of the markets, we talk about all the intelligent things that we should have done to avoid getting into the problems we did, like risk management systems financially. And of course you're talking about corporate governance. The capital markets companies have actually created bigger losses for those that have invested in the last 6 years post the crisis of 2008 than before. I mean, everything goes out the window. The banks will be back. Don't worry about that. When they can actually see a way forward. The way forward is to assess what the shipping rationale needs to be, and it needs to be related to cargo rationale. You need to actually be able to look forward at what's a potentially growing business. We have at the moment a bit of a problem in certain sectors because fundamentally there isn't a way forward right now that you can see in the container market, the dry bulk market, maybe bits of the LPG, LNG market looks horrendous at the moment. So all the bankers run. And then they start talking about, sorry, we're not going to lend any money to you because you actually aren't ticking enough of my boxes. But trust me, when the market's good and you can only see sunshine, your guys will be back. So thanks very much for that.
Chris, you're sort of, in a way, sort of the caught in the middle of this. You're having to flex the scale of your operation to deal with the ebb and flow of new building, not only in shipping, but in offshore, clearly. So you, and also adapt to changing physical technologies as well as the cyber things. This creates real pressure for you, this, the current uncertainties.
Well, it does, but I want to get back to kind of try to bring these two guys together, because I would argue that one of the most, I'm going to get back to technology, I'm going to put a little different spin on it. I would argue that techno-economic thinking is something that we all need to do going forward, because if you look at the shipping market going forward, it's going to be efficiency and productivity that's going to drive the market. And so the question is, where is that going to come from? Well, it's going to come from technology in response to regulations. And I would argue that the financial analysts and the bankers need to have a sense of what is the technology out there, because there's a lot of new technology, untested technology, expensive technology that actually comes into the commercial decision-making process. And I think it's very important to understand. I'll give you just a very simple example. You know, we talked about a wild card of commercial scrapping, but you know, in the next couple of years, it's very easy to see decisions being made on what do you do with 15-year-old bulk carriers relative to what we see in the market now, and run that economic analysis with respect to investments that need to be made to comply with regulations, or to comply or to improve efficiency relative to how does that, what type of return do you get over the lifetime versus you get something relatively new. And I think the mindset going forward for all of us is going to be a greater focus on techno-economic thinking in order to land on the right decisions that we have to make.
Thanks.
So you're talking about early obsolescence because technology is advanced with the next generation of ships?
That's correct.
Henriette?
Yes, just to comment on your remark and comment to Dr. Klaus Stoltenberg. From where I sit, I see this is exactly the time where we steer through the crisis together with our customers. And our DNA in DVB is to be counter-cyclical. And we see it as our key role, at least from where I'm sitting, to identify where are the opportunities. I don't agree that we are at the bottom of the cycle in all sectors. I agree that we are...
I didn't say that, by the way.
No, but I foresee a lot of challenges ahead. And my point before was also to identify where are the opportunities post the rebound, but also to guide together with our customers.
We'll help you.
I also agree with you, but I also think that this crisis proves how important it is to be close to cargo as well. As a third point to your, and this is crucial for us, that our customers has access to cargo, and it's not a pure speculative deal that we're looking at.
Guy, I must take this opportunity to ask you to talk a little more about the vision that SGX seem to have for the future Baltic Exchange and what you perceive as a player in the market, about what that change will bring, because that's a very real example of the potential for disruption. And ultimately, it is a product of the technology that they would be bringing. There would be arguably more electronic-based tools involved, and even potentially you're moving towards electronic platforms for actually trading physical markets.
I think we've been there once or twice before.
Yeah, quite. I think
we've been there with level Cs. There's an argument that the initial business model for Baltex was perceived as an attempt to move down an electronic model to put itself in a position where it competes with its very core membership. I think I can't speak for Singapore Exchange, but what I can tell you from the discussions we've had with them, and as a board, our belief in the opportunity going forward is not one of electronic platforms that makes broking obsolete. It's one of opportunity and growth in derivatives and growth in trading from a market that is as yet properly tapped, that are trading the physical commodities that we transport, but are not trading the freight component of those physical commodities just yet. So what we believe and what they believe in is this parabolic growth in derivatives trading via Asia predominantly, not losing sight of where we are today, not losing sight of what we stand for as a brand, as an exchange, as a membership organisation. So their investment in technology is probably an investment in future products, developing new products that can be traded from a derivative perspective and provide a good risk management tool for the physical market.
Can I ask you, though, about that issue of volatility? Now, all commodities markets are volatile, as everyone has witnessed over the last decade. Mm-hmm. But arguably, dry bulk freight, is one of the most volatile of all. And there's no fundamental reason why that should be. Arguably, it's because of the lack of the transparency between the cargo owners and ship owners and the role of the broker. If volumes grow, you're likely to have tighter margins, tighter spreads. Surely the role, as Richard says, the role of the broker gets squeezed in that. But isn't that actually for the long-term benefit of both the cargo owner and the ship owner, in that volatility is more closely aligned to sort of rational market economics?
Potentially, yes, but it's risk management. The reason that the market is so volatile is more and more of the commodities that we carry are traded in a spot environment, less and less long-term business, and that creates spot demand for our tonnage. And people still trading, if they're going to take ships on long-term time charter or want to commit to long-term sales of commodities, need some ability to hedge that risk going forward. And the forward curve from a freight derivatives perspective is one method of managing that freight component.
Richard, should SGX push on and develop a physical electronic platform?
Absolutely, of course they should do, because we actually have to create more and more efficiencies. You know, the broking network's been responsible for ensuring that information flows. People have gone to jail for actually avoiding the broking system in the past. A fellow from Odfield ended up there for a bit of time. In the chemicals market, antitrust. We need to actually look at what the future role for broking is, and we actually have to acknowledge as brokers that the platforms need support, and they need support from information providers. Of course, there is an enormous conflict of interest at the moment. You've got index providers who aren't members of the Baltic Exchange, who only want to engage with the SGX on the basis that they're going to have a future role. My view is very simple. If those people don't want to participate, it doesn't matter. Because basically we'll be able to monitor all the fixtures just as we monitor all the ships, just as Jonathan Lee's talking, as you quite rightly said, Ioannis, about today with AIS, we can actually monitor cargo flows, we can actually monitor where the ships are. We've got to actually embrace technology and what it can bring to us in the future. And I think that's equally the technology in ships, which he and I are particularly keen on. We're interested in making sure the information for the bankers flows in the right way to make sure that we actually support you with real-time cargo knowledge and where the future lies. So I think the role of the broker is still important. Avoid us at your peril in some ways, because, by the way, at least our cargo clients respect us. And I actually have to say, on the whole, we love the ship owners. We don't come down here for no reason. And by the way, Guy, I think that we probably are pretty much aligned in our thinking. What I think has been a slight issue has been clouded issues, because not everybody's got the same agenda in this debate. The shareholders want to get the best price. The index providers want a job in the future. We want to actually have a more transparent industry where we can actually all potentially steer ourselves in a more secure way, which is what you guys are talking on the banking side, I understand that, into the future.
Sorry, Richard, the role of the shipbroker is vital going forward. The role of a shipbroker is vital going forward. It's so important to this business. Yep. Now, I was broking in the early 90s. I got out of shipbroking because I felt that the onset of level C's, the onset of the technology...
You bloody well came to work for Klaus.
Well, you...
Gentlemen, please.
I got out of shipbroking because I feared that the future of broking at the time was threatened. But sitting on the other side of the fence, whether you're a charterer, a trader, a derivatives trader, a physical trader, whether you're a ship owner, an operator, you need the information flow from your broking. And you can't make the right decisions, you can't make the proper decisions without that information flow. That's vital. But equally, as an industry, we like to keep our business private as well. We don't want to circulate what we're doing. So what we rely on is the integrity of the brokers that we fix with, being panelists and creating the transparency through the benchmarks that enable the market to get the feel for the flavour of where the market's heading, what the changes, what the trends are in the marketplace.
So you believe in private, small, discrete information?
No, I believe in transparency on the back of an index and a benchmark process.
Right. Ioannis, can I just bring you in here? You mentioned the VLCC chartering app, which has been, I think, quite a quiet revolution. And just the other day, I'm sure some of you would have seen, there was an article, a further article about Cargo Metrics, this US startup, which has been around for about 5 years now. And it's hit the headlines again. It's effectively a hedge fund. It's hit the headlines because the likes of Google's Eric Schmidt and even Edan Offer have invested in it. And what it's doing, it's scraping ship cargo data from around the world and crunching it. They're claiming to have the data of 120,000 ships. They're scraping it and they are trying to create a map of cargo flows. And they're using it to then trade derivatives on commodities and currencies and the like. Their long-term aim is to, he's the guy, the founder says, is to build a real-time map of the global economy. Now, in your work, you're trying to use the tools in the tanker market as they are at the moment to monitor these flows. But clearly there's a very long way to go, even in the tanker market, which historically has been much more sophisticated in its trading of use of financial instruments.
Yeah, I guess there is a long way to go, but I think what is quite clear is that it's leading to something very interesting, and I think that's also the reason why you're seeing more teams who are working along this direction. Because I think if you do a very small investment of a year's worth of work, you would realize that, and it's an investment that compared to buying a ship is trivial. I think you will realize that there are ways to enhance the income that you get from the ship in the spot market by having this information. And I think one important thing to say, going back to the question about where this information comes from, and it's certainly a lot of it comes from brokers. I personally, although I'm like a full tech guy and like I love Uber when I go to New York, and you know, and in Athens there's only one car. So the interesting thing is that I cannot imagine of shipping without brokers for a long time, because a lot of the important, you know, pivoting information that you can then integrate into a system and get a real accurate picture of what's going on in the market has to come from you know, agents on the ground.
Okay. Yeah. So it's that sort of agency role. It's not merely the post fixture work.
And absolutely, the part of concluding the deal, the last mile of concluding deals, can get complicated. Yeah. And but I do believe the process will change to a certain extent. I think the broking houses will step up their game in terms of the analytics they do, because there will be more, let's say, there will be more opportunity to do so, and maybe some competition from some external companies which are and aren't like broking houses. For example, you're wearing a vessel values badge holder, and you know, I think that, for example, what they did for the valuations is excellent. I mean, valuations used to be a little bit expensive, you know, now they're more reasonable, and I think financial institutions love them for it. I think that's great news.
Henriette, how is this increased use of data and transparency affecting your work and the research you can put in front of your bankers?
It's fantastic.
And is that, I certainly as an outsider get the impression that overall the volume and the quality of knowledge of markets has risen over the last decade quite significantly. Do you believe that you are supplying your principals with better data to make their decisions better?
Yes, of course, the platform of the current status of the trading patterns and all the information we have available has increased significantly over the last years. But we still need to apply the qualitative view on our future in order to have a better earnings forecast, asset value forecast, to do the bottom-up approach and to see where are the markets going in the future. So, of course, having a better platform of information makes it so much easier to forecast, but you still, in today's market, need to apply the game changers, structural changes, and that is not something that is based on a qualitative view. So yes, we can supply much better scenarios for both our customers, but also our internal and regulators, stakeholders and stakeholders. And
in a nutshell, what are the key next steps you see in that process? Are there any key plugins you need in terms of data or transparency of markets? Is there anything you would feel would lift your product qualitatively?
I think that this crisis has also led to an increase in cooperation. We've always had a very close cooperation with our customers, and we have, as a bank, have always reviewed time charter parties, pool arrangement, historical performance. That has just become even stronger, that cooperation, and that will continue in the future.
Chris, in the past you've talked about big data. Of course, the theme big data has somewhat been tarnished by being too glib and not specific enough in many ways. You know, what does it actually mean to people day to day? As of middle of 2016, these issues of transparency and information flows and the analysis you can get from it, how is that changing your work?
Well, that's a great question, Julian. I think whether it's financial data to assess financial risk or technical data to assess technical risk, I think one thing that is very, very important, we cannot forget people in this big data revolution. And it's important because you have to remember that in essence it's not about big data or trying to get big data to small data or information, but it's about knowledge, and it's about knowledge of what our people bring. And in this industry, whether it's on the financial side or on the technical side, there is going to be an obligation to train our people to think differently in this type of environment going forward. And it's very important not to lose track of people. There's a wonderful quote out there that says, if Henry Ford had access to big data without leveraging the knowledge he brings to interpret the data, would he have invented the first car, or would he have invented simply a faster horse? So as we talk collectively, and it's going to be a challenge for the industry, when you look at the absolute value of talent going forward to accommodate these technology breakthroughs, these game changers and so forth, you're going to be looking at non-traditional skill sets that are going to be coming into this traditional environment. And it's going to be an obligation and responsibility of all the shareholders and stakeholders, whether they're financial or technical, to be able to absorb into the culture of this industry non-traditional skill sets to be able to handle this big data. Because at the end, and you will actually get non-traditional skill sets from non-traditional sources. We've talked about, it's very interesting, we've talked about technologies, and I actually believe that disruptive technologies will come from outside our industry. We've talked about the automotive, we've talked about the aerospace. Quite frankly, you can bring in the medical industry. Medical industry is a tremendous industry. The predictive data analytics to use noisy data to make diagnostic decisions is right in our sweet spot, whether you're a broker, from the technical side or from the financial side. So our challenge will be, at the end of the day, aside from all the wonderful things we're talking about, is how do we bring the people in to be able to handle the disruptive technologies that will come forward.
Excellent. Now, I just want to talk about ship finance and shipbuilding for a few minutes, and after that I hope we'll have any questions that any of you may have. We have a few roving microphones, excuse me. Klaus, could I ask you, there's the old saying in shipping about shipyard capacity and finance, there'll always be enough of both. We're now looking at a situation where potentially, the worst case scenario, there won't be enough of either. We have arguably the biggest question mark over the physical market is the state of the South Korean shipyards right now, and the attitude of the South Korean government to the debt restructuring there. Vasilis Kurtsikov mentioned this yesterday, and I think he made a very good point. On this side of finance, many of the traditional lenders have been reducing. Public equity markets are effectively shut. Private equity has been in, been out, teetering around. People talk about private debt being there at a price. Throughout all this, the world will need something like $700 billion of finance for new buildings in the next decade. Where is that going to come from? I trust some will come from Deutsche.
So do I. No, honestly, sure, we will be there, but yeah, that's an interesting question. Obviously, there is always capital, as said before, that will want to invest and will need to be deployed on the one hand, and there is specific client demand on the other hand. And what seems a bit challenging in shipping is to bring these two together. Yeah, it always takes ages. When you're a ship owner, you have a specific ask, and it takes long time to make something work and to find the right pocket of capital for your needs, especially given, as you said, that your traditional banks may no longer be there or may no longer have appetite or capacity. And I believe this is exactly where an investment bank can be helpful, to bring the capital and the demand together, and this is what we are very focused on and where we are helpful in many specific situations. We may not always have the balance sheet ourselves, but we are there to help find capital for specific projects.
Will this drive owners to become more industrial in their thinking and their business planning?
I would think so. I mean, look, we all know there was a lot of smart capital coming into the markets for the last years. They were all expecting for some cyclicality, which didn't come in specific segments. So now, yes, there's some blood also on the side of the private equity land and so on. So not all of the investments went as expected, but still, I mean, there is always capital that, especially from institutional investors, that look for long-term investments, that look for yield, and of course, with the headlines we now have, they may not be or not yet be there on the sidelines, but there will always be capital, and I guess it's our role to bring that together. And you are talking here on another note of game changers. As you know, in the world of finance or banks, there are also many developments, and we see in many areas fintechs coming up, and that's somehow good because they challenge. Yeah, there is a new generation coming in. They challenge existing setups, and I'm not trading names here, but from what I've seen for the agenda of Marine Money in a couple of weeks' time, I believe someone will be there to present actually a platform, a fintech platform for ship lending, which, from what I understand, will be exactly hit the nail. Because if that was to fly, I think an owner who's looking to buy a ship at 8 million now and is looking to raise finance of 4 million, you may find very hard actually with the existing banks to get such a transaction done. And I think this is exactly the angle of that platform that's about to be presented in a couple of weeks' time. So there are developments, be it a fintech or whatever, regulations are changing, shaping our world very much. So there are also developments on the side of financing. But overall, clearly, what you say is right. We see existing banks who have to pull out. Some have to sell 3 billion here, the next one to sell 4 billion there. This adds up. And let's be clear, that means in existing facilities, owners will find new lenders, yeah, because paper gets passed on overnight. But history repeats itself. It happened in the last cycle. Much more of this is now to come. But this doesn't have to be bad. No? These can be very sophisticated and committed investors. Let's see how this pans out.
Just on that score, I must ask you, while we have you, your perspective of the German ship finance market and the shakeout over the next 6 months. The last 6 months, there seems to have been a definite acceleration in the rate of consolidation and reworking. Where do you view that market moving in the coming months? After years of very little happening.
No, I agree, and I think many of my colleagues in other firms have said the same. There is no more room to kick cans. I mean, people are now prepared also in the financial institutions to face reality, mark down their loans, adjust to market values. So all these concepts about valuations, your long-term asset value, applying all of this, sooner or later you're running out of arguments to apply all of this. And so people more and more face reality, but that means that they more and more increase loan loss provisions, which gives them the capacity and the room to crystallize losses. And I believe that's exactly going to happen in the next months and years. And this may be bad news for some of the clients, certainly, but as I said, I mean, there will be others to take over, and this doesn't have to be a bad thing in itself.
Richard, can I ask you, the situation in the shipyard business is pretty chronic. You're dealing with some of these people daily, if not more frequently. Is there a real risk of serious dislocation, which could be for the good, of course?
I mean, I think you have to say that in shipping, generally speaking, chaos is actually pretty good for shipping. We've got chaos at the shipyards at the moment because of the massive debt that they're lumbering forward with, and of course, we have news today that STX has indeed been successful in seeking court protection, which suggests to me we're just going through a process whereby we will probably sustain, with government support, a surplus shipbuilding capacity for quite some time. When it comes to funding, the fact of the matter is that the most powerful source of funding today comes from China in the form of either lease finance or export credit. The Koreans, if they want to be involved, probably have to ensure that their clients are equally supported financially. They'll find the support, I don't have any doubt about that. But yeah, shipyard capacity is set to be reduced. It was vastly in excess. The fact of the matter is the shipyards are going to have to send some of the workforce home. I think clearly politically in Korea that's uncomfortable, but I think they're grasping the nettle. So yeah, you will see a reduction in capacity. In the future, you will see a shortage of shipyards. God forbid it's sooner rather than later.
So prices will be going up.
So prices will rise again when we get to that position. We're not there yet, but we're at an emergency level now. I mean, you're going to see Angela Cousins is contracting VLCCs and LNGs with DSME at levels this week, which are obviously frightening when you look at the consequence for them providing valuations to our friendly bankers here on the basis of looking at what they've already got in their portfolio. The truth of the matter is the German banking system has actually fallen foul of not actually owning up to what the real value of the assets was, and they're having to now admit that because the auditors have had enough of that, haven't they?
No comment. Which is also comment.
Thank you. Now, are there any questions? Anybody got any questions or quick points they would like to make? Surely, such an informed crowd. Guy, could I ask you? Oh, my apologies, sir, down here at the front. Down here on the front.
Yes, it's Ioannis from Maritime. I sitting listening to the conversation, and it seems that a lot of people want to put shipping in a box, but it isn't the case. Shipping cannot be put in a box, cannot be controlled in such a way, to say consolidation is the answer to shipping is not necessarily either the solution, because you're in a country here in Greece which actually has over 700 companies and has created a lot of wealth for those individuals, the people who actually care about those ships in a different way than these big corporations. So I think to say that it's only one way, that it should only be about consolidation, only about technology and all that is a little bit far-fetched. Of course, some of these things do help. So my question is to Klaus is about financing those individuals who they started out with, being a captain or having one ship, ended up with a greater fleet. Would you finance those ship owners who truly, put their heart into that work?
Yeah, no, thank you. I fully agree with you. There cannot be only one answer in this crisis, and consolidation is one obvious consideration to make. Maybe it's not the answer in a specific given case. Look, I mean, we are not one of the largest traditional lenders per se. We have in commercial ship lending maybe 5 billion out overall vis-a-vis the whole industry, also a few other products, corporate loans, and name it, maybe something as close as 7 billion. So we are not there to make a difference. We are there to make a contribution when it comes to plain vanilla traditional lending. We are doing it. We have been doing it for ages. We are still there, and we are happy to do it. But obviously, if you think about our value proposition, we are clearly, with all what we can deliver with our platform, of course, we are also focusing a little bit on certain clients who are asking for our platform. That doesn't mean that we don't do single transactions with good clients who are asking for our balance sheet. We are there for this, but in terms of where we focus on is, of course, clients who engage with us for a holistic conversation where we can help on many different activities in terms of advisory, how to take the business forward, who are asking not only for our balance sheet. This is where we spend most of our time on, but not all, to be very clear. But I've been in this market for almost 20 years. I feel very close to many shipping companies, no matter how they are set up. As I said, we do contribute, we are there, but also to be very honest, in terms of liquidity and funding, you know that, for example, there are banks who have original access to dollar funding, who are in a dollar world, and for them it's much easier to get a loan done, or a friendly competitor of ours, they have ship finance as part of their asset wealth management. It's a very different business model, but if they get deposits in, investments in, maybe easier for them to lend long term. So that means we are there, but in plain vanilla, we are really good in a little more challenging type of transaction, where we can add value with our structuring expertise. When it comes to plain vanilla lending, we may not always be the cheapest, because in terms of our own liquidity costs and in terms of our own return expectations, I heard we are sometimes not the most inexpensive one.
Yeah, and then just to add, the truth is that the problems that we face today have been created by those people who are not necessarily in shipping, investors, KG structures, investors who don't really get involved in shipping, they just invest in the shipping, and then you have managers who do their role and don't necessarily think further than just doing that particular job. And that's what's created these problems. The Scorpios of this world that ordered 30 tankers in a row and other such structures that just looked at the numbers and didn't think about the long-term sustainability of this market.
Just a moment, this is great, but you know, these guys have presented you fellows here with a wonderful opportunity. They've collapsed the market, haven't they? It's market cycles, my friend. Actually, you know, you'll find any number of shipbrokers and investment bankers to sell any story that can make them a fee. Some guys took a load of fees out of public companies. I reassured some of the people in the audience that eventually they were going to overdo it, and now look what's happening. We got people like the Martinos sitting in the front row here who are able to pick up. Andreas did a fantastic job last week, didn't he? So the fact of the matter is these are creating markets and opportunities. Don't worry about it. It's going to continue. And of course, the more enthusiastic the bankers are, you know you're actually getting close to the point where the enthusiasm will again force us over the top of the market. So we undershoot on the bottom, that's what we're going through now, and we'll overshoot on the top, but just be listening to what this guy's saying, listen to the technology, it's changing, don't assume that every cycle is the same, they're all different.
And they certainly are. I mean, that's what I'm saying. Shipping is not to be put in a box.
Many thanks for the question. And there's another one in blue just behind. Actually, but Henriette, just follow up on this before the next question comes in.
Very brief comment to Klaus. I agree that we will see consolidation in some sectors, especially container, but not in all sectors, and not necessarily in the sectors which are relevant for a lot of our Greek clients. We are focusing very much on the customers, good customers doing a good business in shipping. So that's our DNA.
Please, sir.
Yes. Hello? I'm Francesco Lauro from Italy. Hi, Richard. It's a criminal association, not me, but I think the process that brought us, to face these storms, because I think there is some film producer called the Coen brothers. And their main theme is that the world is ruled by stupidity. I would add, quoting Adam Smith, that is also ruled by greediness. Therefore, if you put together stupid with greedy people, I think you have got all the ingredients for a disaster. The problem is this, that we have got ship owners who invest their own money, and very often they are not the most successful bets, and they lose the money. Then you have got people who manage other people's money. They could be on the ship owning and ship management side, they could be in the bank side, lending the money, they could be institutional investors. All these people, they play with the other people's money, and therefore the price for their wrong bets, for their conformism, generally they base their investment on the present market, not on the fact that if we build a lot of ships and the market will not, the demand for tonnage will not grow forever, there will be an excess of offer of tonnage, and things that I think my son, who is 4 years old, would understand, but the big banks and the big institutional investors seem not to understand. The brokers, they are clever guys, very clever guys, but they are very greedy, and I've never seen a broker telling his clients, no, please don't build this vessel, don't buy this ship. I'm having 1% commission, why should I say this? So I think I would put a rule that everybody who's giving advice, brokering, financing, managing funds, investing, he should put at least some of his money in the deal, and then we will have only the mistakes. Everybody of us make mistakes, but we all pay for our mistakes. What I find dangerous and unfair is that there are some people who are not paying for their own mistakes, and that these people are contributing to create the problems.
And I'll rephrase that as a question, Richard and Klaus. This you better go for the bankers and the brokers. And Klaus, your money in these deals? That's it.
Look, I mean, I think it's fair to assume that from German shipping banks, they had to provision 10 to 15% of their total exposure. So these banks are losing billions here. Even though they thought they do safe senior lending, they lose billions. They lose some of their shirt, if not all of the shirt. So I think we took our fair share of problems, burdens, and losses ourselves.
Good. Thank you.
The only comment I will make here is that I think when it comes to corporate governance, public companies, there is a need to actually have a proper alignment of interests. The problem you've got is people have different agendas. I mentioned it before. And of course there are people being widely criticised for taking a lot of money off the table whilst their investors are losing a lot of money. I think that's really down to the public company boards to sort that out. They're the ones who are supposed to oversee it. The majority of shipping companies don't have proper public company boards. What they have is a group of friends who allow them to get away with precisely what they are if they happen to be the managers. So I think that definitely needs to change. To answer your question, don't trust shipbrokers, you're absolutely right. Majority of them are interested in the fees. And just by the way, we have invested in ships in the past, but it does create conflicts of interest.
And just one very final question, just down here. Thank you.
Yeah, good morning to all of you. My question is basically, whether shipping is not a demand or is not a business in its own. It's a derived demand, actually, depending upon the trade. It's all about the commodity which drives and the needs. So what I hear, I see the problem basically being in dry bulk, that it's not such a technical, it's like a tanker, chemical, you need some technical knowledge and expertise. Even for the dry bulk ships, anybody can just enter into the market. So that has been the primary market, primary problems. The second problem is that it's a derived demand, so then the uses of derivatives must be there actually, which I believe is not, the many ship owners are not using that as a tool to hedge. Like when you're buying so many ships, first of all there should be question that is there a demand for it? How am I going to secure my earnings? If there is no collateral of, COA or I think then you are playing a gamble actually. So basic problem is starts from the beginning of itself in ordering the ships. And the third problem which I would like to ask to the guy actually from the Baltic Exchange that on the Supramax and Cape, if you go a little bit in technical, the Panamax and Cape is very well hedged on the routes, more or less, because they are long-haul businesses. The vessels are being ordered to that particular to that route. But when it comes to the Supramax, we see that it's a lopsided trade happening at this point of time because of the emerging country like India, China, Southeast Asia. More or less, the demand is very much centric over there. Of course, there is a certain demands in the other part of the world in Atlantic. But then the routes.
So the question is?
So my question is that the routes is not been weighed properly. Like we have S7, S8 is still a trial route. May I know that when it can be so that the people can hedge, the utility company, cement company, or they can hedge their requirements for freight, so they are not so much exposed.
So the question is the hedging mechanisms aren't working as well as they should. Guy, in a nutshell?
Okay. Well, of course, in the Cape and the Panamax market, the trades are far more simple, far more condensed, if you like, and it's very easy to mark the routes in the Cape-size trades. It's relatively easy to mark the routes in the Panamax trades. When you get down to smaller ships with such a variety of trading routes and a variety of commodities, it's very difficult to put an index together that is concise enough for panellists not to spend 3 hours of their day, just 30 minutes of their day, analysing and scoring the market on a given day, versus the need for as accurate as possible an index. So what we're going through at the moment is a process of modernising the Supramax index. It's moving from a Test 52 to a Test 58. In addition to changing the vessel type, there's been a series of discussions with the marketplace, the users, the panellists, etc., with respects to what routes are relevant to that ship type today to give us a more comfortable perception of average earnings. So what you're seeing is the Supramax index moving to 13 routes making up the sum of the parts, including some Indian routes. So you will see that. Now, personally, I want to see an improved handy-size index. The 28,000 deadweight ship is becoming obsolete, and the handy-size sector is moving closer and closer to 36,000, 38,000 deadweight. So I'm hopeful that the changes in the Handysize index will do the same, we'll see the same development in vessel size, and we'll certainly have quite a creative debate as to what routes you mark to make up the sum of the average earnings.
Thanks, Guy. Chris.
Yeah, I just wanted to add on this particular question, although it was a financial question dealing with financial risk, is we should never forget technical risk. And I actually believe, we haven't talked a lot, we talked about a lot of issues, we haven't talked about classification going forward, but I actually believe classification now more than ever in this very, very dynamic environment will play an even more important role. Because classification at the end of the day has a very, very unique position. It touches many people in this room. It touches governments, owners, shipbuilders, equipment manufacturers, and it is able to look at the performance of the vessel over its life. And it's also independent. It provides an independent, it's quite frankly the independent technical keeper in the industry. So when you look at all these very interesting problems, I'm a naval architect, I'm not a finance person, you look at the importance of assessing financial risk. Technical risk, it gets back to techno-economic thinking, will be very, very important. I believe there will be a day as we move forward that technical risk and financial risk will more or less be at this, will sit equally at the table. And for all of us in this room that focus on the technical side, especially with the importance of classification, take advantage of a wonderful, very, very wonderful mechanism that is very unique in this industry that can help provide a lot of information to help put a little bit more color on the very interesting things we've talked about this morning.
Thanks very much, Chris. Well, I think, I hope you've all heard some very interesting contributions about the myriad issues that these markets are facing right now. There are clearly a lot of opportunities, both short-term trading as well as these longer-term opportunities. And I said, my optimism goggles, I can only see, but this industry will continue to grow, clearly, as it tracks world growth, which offers a great deal of scope for innovation and ambition. Thank you for your attention, and particularly thank you for the contributions from all of the panelists. If you'd like to give them a round of applause. Many thanks. There's a networking reception outside until around past, and so if we can come back then and rejoin for the Shipowners panel, that'd be great. Thank you very much.